The Czech Republic exited a record-long recession in the second quarter, while Polish growth accelerated from a 4-year low as the Euro region halted its slump, boosting demand for Eastern European exports. Joining me on the line to discuss the prospects of emerging Europe economies is Gergely Tardos. Now, Gergely, Polish growth quickened from 0.5% on an annual basis in the first quarter, with the nation notching a third straight monthly trade surplus in June, the first time that's happened since the data series began in 2000. Is its status of the economic emerging Europe darling suitably been reaffirmed, do you think?
I think that the main reading of the story for Central Eastern Europe is that the majority of these countries are speeding up and economic growth is propelling up. At the same time, when the fiscal situation looks to be more or less consolidated and also the external imbalances are disappearing. So in my reading, all of these countries are stabilizing, and those worrying signs that can be shown in the previous quarters are decreasing.
Hungary, on the other hand, bucked the trend slightly as the latest GDP reading posted a negative surprise. Do you think this, combined with lower than expected inflation, increases the Hungarian central bank scope to deliver another 25 basis point rate cut later this month?
Well, the GDP growth in Hungary in the second quarter was 0.1% quarter on quarter, which is below the level reached in the first quarter. But this was in line with both the market consensus and with our forecast. So everyone expected a 0.5% growth year on year. So I would say that this economic performance is in line with the expectation, and this is consistent with an economic growth of 0.5 to 1% this year. Our forecast is 1%, but inflation was also lower than expected. That's right. But the main reasons for that, in our reading, will be temporary, so inflation will move on the forecasted track. But this track is much lower than the previous years. In Hungary, inflation was always higher than in the region, and in this year, this trend comes to an end. And in our opinion, disinflation is happening right now in Hungary. These factors contributed to a very long rate-cutting cycle in Hungary, and right now the base rate is at 4%. The Monetary Council announced that they will go down with the base rate to 3% to 3.5%, but in smaller steps than 25 basis points. So it's very likely that next month the Monetary Council will cut by, 10 basis points or 12.5 basis points, which is not a conventional approach in rate setting, but this is the most likely scenario right now.
Indeed, many analysts are saying the key question going forward is about the pace of recovery for this region. But what about their currencies? Pressure is expected on the forint, for example, due to difficulties in household FX loans being paid back. But what is your outlook for it, as well as the zloty and the Czech krone, for the next 12 months?
Just one sentence about the pace of growth. I think that growth will speed up in the region, but it will remain fragile and very, very sensitive to what is happening to Western Europe and also what is happening with quantitative easing in the US. In Hungary, we think that this whole FX debt conversion thing will affect the forint only temporarily. In our view, the HUF is weaker than it would be for a fundamental point of view. We see a very, very high external surplus and a very sharp building down of external debt, and I think that this provides a very strong support for the forint. For Poland, in my opinion, the exchange rate will remain at the current level, and in the Czech Republic we think that there is a possibility for a modest depreciation. Right now inflation is very low in the Czech Republic. Monetary policy is biased towards further easing, and this can take the form of introducing unconventional methods, and this can contribute to the depreciation of the exchange rate.
Yargili, thank you so much for your time and perspective today. Viewers, that's all from me for the day. Earlier I conducted a press review focusing on Egypt's political woes, so please do click back for that. But for now, goodbye.